Hi everyone, welcome to my channel. In this video, I will be sharing what you need to know about SRS. SRS stands for Supplementary Retirement Scheme. Please take note that this is just a knowledge sharing session and be sure that it is not sponsored. Now, let's dive into what is SRS. Implemented by Singapore government in 2001, SRS is a voluntary scheme to encourage individuals to save for retirement over and above their CPF savings by offering tax incentives. Contributions to SRS are eligible for tax relief. SRS contributions can be invested in funds and stocks. In fact, SRS account only has an interest rate of 0.05% per annum, hence it would be better to invest your SRS money. Investment returns are tax-free until it is withdrawn. I will cover more on the withdrawal fees later in this video. The money in SRS account can be used to invest in a wide range of investment products such as bonds, fixed D, and also shares, insurance, etc. Singapore citizens, Singapore permanent residents, and foreigners who derive any form of income can make SRS contributions in the current year. And of course, you have to be at least 18 years of age, not an undischarged bankrupt, not suffering from a mental disorder, and is capable of managing yourself and your affairs. As the opening of SRS account is voluntary, it is not automatically open. You have to approach one of the bank operators listed here in order to open an SRS account. You may make SRS contribution at any time and as often as you like, subject to the maximum SRS contribution for the year. All contributions must be made by 31st December of the year to be eligible for SRS tax relief. All contributions must be made in cash. From 2016 onwards, the maximum yearly SRS contribution for Singapore citizen and PR is 15,300 and 35,700 for foreigners. The reason why there is a cap for SRS contribution is because SRS is meant to help individuals to save part of their income for their retirement on top of their CPF contributions and should not become a tax shelter for the asset-rich or high-income individual. The tax relief amount is equal to the actual amount of SRS contributed in the preceding year. Here, for example, Mr. Tan, who is a Singaporean, contributed 50,000 in 2020. He will then have a tax relief of 15,000 included in his YA 2021 tax computation. For your information, you do not need to make a claim in your tax return as it will be allowed automatically based on information provided by your SRS operator. The SRS tax relief will be reflected in your e-filing. Also, do take note that there will be no refund for SRS contributions made should you not be qualified for any tax relief. Hence, please evaluate whether you will benefit from tax relief on your SRS contribution and make an informed decision. Kindly take note of the yearly maximum SRS contribution, and also for personal tax relief, there is a cap of 80,000 for each YA. In terms of the SRS withdrawal, there are a few things you have to take note of. First of all, withdrawals can only be made in cash or in the form of investments. Withdrawals are subject to income tax and added to your other taxable income such as employment and rental. Withdrawal of funds can be made at any time, but the time and circumstances determine the taxable amount of your withdrawal and whether there is a penalty imposed. You can make withdrawals from your SRS account over 10 years from the date of your first penalty-free withdrawal. I will elaborate on the fourth point later using an illustration so that you can better understand this point. If you are a tax resident in Singapore, the taxable amount would be following the prevailing tax rate shown in this diagram. For SRS, it is important to know how the concept of statutory retirement age works. It determines whether your withdrawal is subject to any penalty. Withdrawals are penalty-free only if they take place on or after the statutory retirement age that was prevailing at the time of your first SRS contribution. The statutory age is 62, as at the time this video is made. If you have already opened an SRS account and have made the first contribution, any subsequent change in the statutory retirement age will not affect you. As this retirement age will only keep increasing over the years, if you are interested to open a SRS account, it is advisable to open up an account as soon as possible and make your first contribution so that you lock in the current statutory retirement age. On the other hand, any withdrawals that are made before this statutory retirement age will be subjected to a 5% penalty, and 100% of the amount withdrawn will be taxable. Do take note that the penalty-free period only lasts for 10 years from the date in which you made your first withdrawal after you reach your statutory retirement age. For example, Mr. Lee here, who is a Singaporean, is 64 years old this year. The statutory retirement age is 62 for Mr. Lee. He made his first penalty-free withdrawal at the age of 64 on 1st April 21. So even though the statutory retirement age for Mr. Lee is 62, the 10 years will start counting from the year of 2021 in which he made his first penalty-free withdrawal, and the 10 years free penalty withdrawal period will end in 2031. Early withdrawals before retirement age is the only type of withdrawals that has a 5% penalty imposed. This is to discourage people from withdrawing their money out of the SRS account before they reach retirement age. Here, withdrawal in the form of annuities. These annuities pertain to insurance policies entered through SRS account, such as endowment and term annuities. Let's take a look at some illustrative. First of all, withdrawal after retirement. Here, Mr. Lee is 63 years old this year, who is a Singaporean, has a statutory retirement age of 62. Here, he has no taxable income from age 63 onwards. Withdraws SRS monies on 1st of April every year, starting from 1st April 2021 at the age of 63. He has a SRS balance of 400k. Let's calculate the 10-year penalty-free retirement withdrawal period for Mr. Lee. It will start from 1st April 2021 and ends on 31st March 2031. So, in this table, you can see that over 10 years, he will be withdrawing 40k per year, and the amount of tax that he would pay for this withdrawal is actually 0, okay, and there will be no penalty paid here. So basically here, Mr. Lee has withdrawn the full amount of 400k at no cost. Let's take a look at this example when Mr. Tan, who is a 60 years old Singaporean, decides to make an early withdrawal before the retirement age of 62. Okay, so he has no taxable income from age 60, so he wants to withdraw money on 1st April every year starting from 1st April 2021 at age 60. First penalty-free withdrawal will be on 1st April 2023 where he turns 62. He has a SRS balance of 400k. So a 10 years period will then start from 1st April 2023 and ends on 31st March 2033. So assuming that he wants to start withdrawing from the age of 60, okay, so 40k per year over 10 years period. Okay, let's take a look at this table on the right. At the age of 60 and 61, as he withdraws this 40k per year, this 40k is 100% taxable. So he has to pay a tax of 550 when he withdraws this 40k. And because he withdraws earlier than the retirement age, he has to pay a 5% of penalty, which is 2,000 on top of the taxable amount. So all in all, over 10 years, he will then withdraw the full amount of 400k, but he will have already paid 5,000 in total in order to withdraw this amount. The key takeaways from the previous two illustrations are that SRS is a retirement scheme, so account holders are naturally encouraged to withdraw after retirement age, and the benefit to do so is that only 50% of the amount withdrawn is taxable. Okay, to maximize the benefits, we have to spread out the SRS withdrawal over a 10 years period. To summarize, SRS account is for someone who has extra cash. This is very important. And don't mind their money get locked up until retirement age, but at the same time has a flexibility to withdraw at a reasonable cost. And it's for someone who would like some tax benefits and will want to invest in the same qualifying investable products anyway. If you have any topics that you'd like me to cover, feel free to leave a comment below. I hope you find this video useful. If you like this video, remember to click on the like button. Thank you for watching. Bye.